Well, what a difference a couple of days makes. You know, we had a very strong market yesterday, having been down 2 days ago, closing down 200 points, well below 13,000. Then the rally yesterday, which brought us just below 13,000, and now today, as we speak at 11 a.m. in the morning, up over 200 points, which puts us well above 13,000. And the emphasis on 13,000 is simply that it represented a support level for the Dow on the way down. Once it penetrated that 13,000, what was a support level now becomes technically a resistance level. And if we had had this conversation yesterday, even on the strength of yesterday's rally, I would have probably said to you that the rally really, though up, didn't really mean that much, because without the Dow once again getting above 13,000 and well above 13,000, technically I felt that the market was still in a bear trajectory or a negative trajectory. Well, now it's early in the day, and we've seen moves in the market both up and down 200 points completely evaporate as the trading day wears on. But as we speak, up 200 points with the Dow well north of 13,100, I would say, at least for the moment, we have re-exerted the positive trend in the market. Unfortunately, we really need to see where we are at the close, and it's much too early in the trading day to make that prediction. The reason, I think, is twofold. Number one, there's tremendous strength today, and we started to see it yesterday in the financials. They are the key. This is the group that basically has suffered the most in the downturn, and this is the group that, if the market is to do better between now and the end of the year, that will have to stay strong. And we see a lot of strength in the big money center banks, Bank of America, Citibank. The reasons, number one, the problems haven't gone away, but number two, Citibank received a big injection of new capital, $7 billion. They sold a preferred stock to an offshore investor. Certainly shows confidence and helps their capital structure. That's a positive. And number two, there were some comments this morning from a Fed governor which were more or less suggesting that perhaps the Fed would consider easing at the next meeting, which is in December, early December, which of course the bond market has already been pricing in almost 100% that there would be another drop in interest rates. But I think it's the comments that came from this Fed governor this morning more or less reinforced what the bond market's been telling us. And obviously this is what the market wants to see. One really has to wonder who's in charge, though. Is it the Fed or is it the bond market? I mean, who is dictating to who? But in the end, I'm not sure that it makes any difference, but clearly what the market is telling us is that they want to see interest rates a little lower, because they think that that will be the remedy, at least going out 2 or 3 quarters, for the problems that we have in the home market and all the problems that basically followed the problems in the housing market, primarily in the subprime loan area. A lot of these problems that the banks have clearly are not going away. They're just not going to evaporate overnight. But like anything else in Wall Street, once we start to get a little clarity, once people understand the scenario and understand the parameters of the news, whether it be good or bad, from an investing viewpoint, it makes it much easier to make an investing decision. And therefore, even though the news might continue to be bad, a lot of it could in fact be priced into some of these stocks that have been beaten up so bad, because the clarity basically gives people confidence, and they can see ahead, and they have a sense that the banks and the other institutions that have been affected by all these negative things will be able to work through these problems. Bottom line is, I think we need to enjoy the strength. The market stays above 13,000. It's certainly technically a positive. And just remember, there's only 23 days, about 23 trading days left in the year. And December is always a funny month. This is the month where you start to see a lot of tax selling by individuals. And it could create some interesting opportunities as we get closer to the end of December.